you stay with your Zoom because with different sound.
So I will talk using my Zoom.
What I'm saying is, first you have Zoom. The people you have on Zoom, it's like a room somewhere. You have meeting there, but then this side.
While you're talking, the video that is out is from the cameras. That's one. The voice is from where?
Still, others the Zoom voice is from your laptop.
Okay.
To there.
Okay.
Then the internet, we have our.
Okay, so we can begin.
Let me go to LinkedIn. YouTube is there now.
Promise. Get me a bottle of water. Nelly, when some people wait for 5 minutes, then they don't find the reason why they should wait for 10 and 15. Monday, I don't expect stories when we begin. Nelly, can I use Zoom alone and remove?
YouTube is there. I'm just putting LinkedIn.
And so first, can you begin as you do your thing? Because I see people dropping. Yeah, I can't go beyond 10 minutes. One has
Can you start? Then LinkedIn can get on like I this.
So all these guys will keep here. Last time I had a challenge along with the way they went into their own stories now, not even focusing on what was happening. You remember, Roma? Yeah. So can
YouTube is there. YouTube is there.
Okay, good evening, everyone. CPS, are you there? Are you online? I need to confirm that everyone is listening out. You are able to hear me. Just confirm that.
Yes, we're able to hear you, and I'm here.
Oh, interesting. So a very good evening, everyone. We are very happy to have you this evening, and I'm delighted to host one of the CPAs around town, a tax advisor, a practitioner, a tutor, someone who has impacted many other lives in terms of professional growth and practice. And this is none other than CPA, CTA, Zuriat Nakayenga. And before we begin, CTA Zuriat, please greet our people out there.
I've enabled my video, but I'm not seeing it.
We are able to see you. We are able to see you.
Really?
Yeah.
Okay. Hi, everyone. Good evening. Thank you, CPA Didan, for hosting this. I think it's long overdue. It's very important that we keep abreast with the changing tax laws. Here, discuss and deliberate, deep dive into the new changes that became effective 1st July 2026. I'm happy to answer all your questions as they come in. Looking forward to an interactive and good discussion.
Thank you. Thank you very much. And yes, as I had stated, CPA, CTA, Didan Mutatinensi, commonly known as a tax doctor, and I'm the team lead here at Demo Consult. And this evening, we come with a practical discussion where we are going to break down the changes that have just taken place and that came into effect starting from 1st July of this year. And the fact that they are new, we appreciate that, yes, not everyone is actually aware that some of these things have changed. And as they change, they impact on you as an individual, but also they impact on you as a business owner. And that's why we feel it is important, it is right to come before you and break them down, bring them in a language that every other person can understand, so that as you go to plan how to handle your business, your affairs, you are doing it from an informed point of view. Now, as you may be aware, every year, the government, through Ministry of Finance, brings up changes in the way the tax affairs of a country are handled. And this year, 26-27, was not any different. So a number of changes actually were, first of all, they went through Parliament and were passed. And these were also signed by the President, apart from income tax amendment bill that has not yet been signed, but also the excise duty, unless they have been signed maybe today or yesterday. But as far as I know, these we are waiting for the President to sign. So we are coming before you with, we shall discuss the income tax bill as it was passed by the Parliament. We shall also look at the Tax Procedures Code Act as it was. This has already been signed by the President. But also we shall look at the VAT Act. This has already been signed by the President. We shall look at some of the amendments and changes in the Stamp Duty Act, but also we shall look at what we call the lotteries and gaming amendments. So, importantly, the guest that I'm having this evening is someone with experience in these matters. And when I was looking around someone to host and have this discussion, so that the people in practice, the people in business, and every other person who would actually want to understand this, I couldn't get any better person than CTA CPA Zuriat. She has around 15 years of experience in this practice. So I guess we are having the right people to bring this to you now. CPA Zuriat. I remember last time we discussed some of these amendments when they were still proposals in April, and we were trying to tell our people there would be impact. But now we are coming again to inform our people that it is no longer just a discussion, but these are now rules of the land in terms of tax administration and management. Now, before I get into the details of the discussion, you as a practitioner, someone with experience, someone who teaches people taxation management both in Uganda and across Uganda, when you look at these amendments for 26-27, is there something that is exciting on your side?
Thank you so much, CPA Susan. Yes, when I saw the amendments, they approved and accepted two amendments, I had mixed feelings. I looked at the bad, the ugly changes, and then the good and welcome changes, as we shall see. So, we as tax practitioners and taxpayers, we have mixed feelings regarding the changes that came that were effective 1st July 2026 as we dive into the details of the changes. But I feel like we can't say that they are all bad. It's a balance. Yes.
Thank you very much. Now to our viewers on the call, both on TikTok, those who are on LinkedIn, those who are on YouTube. First of all, we thank you so much for joining us. And as I had stated right away from the beginning, tonight's discussion will be practical. We have not come here to teach how to calculate VAT, not to teach you how to calculate pay as you earn or income tax. That's not the purpose of this discussion. But we have come to tell you how businesses that are not ready, how businesses that are not preparing enough, how businesses that don't think forward actually lose money. But also we shall be able to tell you through the discussion how the smartest businesses are actually doing it, how they are taking tax compliance to be their competitive advantage. That as many other businesses are struggling, firefighting with tax assessments, with banks being frozen, with shops being closed, and many other enforcement measures being taken by the taxman, there are some other businesses that have planned prior and they are actually enjoying the game. Now, let's now dive into these amendments and we shall try to go one by one, may not necessarily exhaust all of them, but we shall go through quite a number of them. And we shall use the first part of the session, a discussion between me and CPA Zuriat. Thereafter, we shall have a 30 minutes for questions and answers. And we are just saying that if you are out there, ensure you are writing down these questions that you have that have been lingering in your mind. You are not sure, so that now these experts can actually tell you exactly what it is before you get into trouble. So now, CPA Zuriat, one of the interesting amendments that I have seen, I've had people call, I've even seen, by the way, for practitioners, accountants, lawyers, asking me about some of these amendments. And this is specifically pay as you earn. If you remember very well, the last amendment in relation to pay as you earn was the last amendment was around, I think, 2012, 2013 there. So after 13 good years, finally, an amendment has taken place and now we have a new law. So what do you have to say about this amendment? What has changed and what will be the impact on the side of the employee, but also on the side of the employer? I'm sure one of the questions that I have is about what is the impact like. Over to you, CPA Zuriat.
Thank you so much. So my response to the changes in the payee rates, what we are seeing is there is an increment in tax-free income for residents from 2,820,000 a year to 4,020,000 a year. So this one is a welcome addition to our tax laws, long overdue. We pushed for this, and finally, Parliament and the Ministry of Finance have been able to hear us. Our proposal was that we need to align the current inflation rates and earnings by our employees, by the employees, because we've seen so many deductions and changes in other areas, but employment taxes remain the same for a long period of time, yet we are seeing this impacts in the economy. So for me, I feel this is a good addition to our domestic tax laws. So to the employee, what we're expecting is a high come 31st July, your net pay will increase, and the reason for this increment will be because of the increased tax threshold and free tax and then the balance, the changes in the tax balance. Then for the employer, of course, obviously, since it's going to motivate employees to see a higher net pay, or the results, of course, you will see the results in how committed the employees will be. So, what now I expect Parliament now to look into, one is to drop VAT on gifts, to drop any taxes on benefits from the employer to the employees, so that we also default that sector. It has been for a long period of time. We know that pay is a cash cow for URL. It is self-policing. So by reducing this, one would think that the tax basket will reduce. However, that is not the case. The collection from payee is not going to reduce, it's going to increase in one way or another. So let's just have even for the tax collectors, let's have a good, let's be happy about this change, and also make sure that in the last bunch, so the other change that we had proposed to Parliament and we see was not touched is the last bunch of the additional 10% being posted on 10 million. So we needed that to also be increased a bit to at least 12 million. We have also seen a point of emphasis that secondary employment is subject to 40%. So we are imploring Parliament to also check that, to ensure that the secondary employment taxes are also not punitive. So now that will encourage participation. If you insist that we impose 40% on secondary employment and someone is only taking home 60%, then that is still going to remain a problem. So taxpayers will continue to inject taxes out of that 40%. So it should be aligned with the progressive nature of payee. So the tax imposed on secondary employment should also be aligned with the progressive nature of our banks. Okay. So that is my take on this. Very happy about this. We pushed for it great, and we finally got it, and we appreciate that.
Thank you very much. That is a good one. Maybe to add something concerning this amendment, we have also seen that now on the side of the employer, this is the time when the employer needs to now review the pay-as-you-earn system, so that now the changes that have taken place can actually be reflected in this payroll every month. Now, what are we saying? That one, we have seen that the lowest bracket now will be from 0 to 335, but then the next one will be from 335 to 410. In between 335 to 410, they will be taxed at 10%. Then from 410 to 485, the tax rate will be 25%. For you and me who are in employment, we need to appreciate that that 25 is the new introduction. So we need to appreciate that impact. Then beyond 485 to the 10 million, the rate has remained at 30%, and any amount above that, that is where you get the extra 10, where we hear people talking about the 40%. So what is important on the side of the HR people, so people who are manning human resource departments, and then the business owners, it is important to review the payroll to match the new rates. Short of that, you keep using the old rates. By the time you wake up, URA is actually assessing you. That is very important for everyone to note. I want us to move faster to the next point. We have also seen VAT changing, and for the benefit of our viewers, that what used to be 150 million as the threshold for registration, an amount in terms of taxable sales that a business needed to have for it to be required by the law to register for value added tax. This has been revised upwards to 300 million. Now, I've had some people appreciating and jubilating over this, but I've also had some other people asking questions. What does it mean for people in business, those who are below the 300 threshold mark? Over to you, Zuriat.
Okay, so thank you so much, Tijan, and for your input in the KA changes. For VAT, obviously, as proponents of this, we are happy that the threshold has been increased to 300 million, because 150 is really low. It's really low. 300, remember 300 is annual turnover, which actually means if we calculate, someone would be earning around 10 million a month, and that is how much. So the business, 150, we're looking at really such a small business and giving it a tax burden of filing returns and all that. So 150 million would mean that a business would be earning 12 million a month, and then using which to repay 400,000 a day. So imagine such a taxpayer earning 400,000 a day, and that is an important expenses. I think first just follow up on tax invoices and all that. So we found that by increasing it to 300, it would then subject, it would then adapt to income. This business that would think was going to higher, that's not because that is learning in progress. That is one of the requirements of remaining on the register. You must keep proper books of books, and then the CG must give you proper fees. So what we have seen in the past is that we put someone got on the register for VAT, and within 4 months, 5 months, they are unable to find returns there, and the penalties are compounding in nature, so it's not very difficult for businesses to succeed. And for 300, I feel like this is a good threshold. However, we are very much aware that by increasing the threshold to 300 million, then we might be denying a taxpayer who feels their fees and probably on the register be able to compete for good contracts, because some companies prefer to deal with black taxpayers. So if we are saying that we are looking to reach at 300 million, then the other change that we expect Parliament to look into is introduce voluntary and emphasize voluntary registration, where you can demonstrate that you fit proper, you have a proper place of business, then I don't see why someone would be denied voluntarily applying and getting on the register. I don't see. Yeah, so I think that is now the improvement we need in the income tax laws, and we are happy that this is 300. So less burden for tax enforcement, young small enterprises, but then we need to get space for taxpayers who want to voluntarily apply and compete with drugs. Yes.
Thank you very much. That is a good one. It's a very good insight. And since 1996, when VAT was introduced in our laws in Uganda, yes, a number of changes have taken place. At one point, that figure, the threshold we are talking about was at 50 million. Now we are talking about 300 million. I don't know if indeed that shows that we are growing as an economy. Possibly that is a discussion for another day. But thank you so much for Zuriat. And those of you who are watching out there, if you are on LinkedIn, just post one thing, know your tax position. For us to know that you're actually watching, just post, know your tax position. If you are watching on Zoom, if you have a question, feel free to post your post your question. Even on LinkedIn, post your question. My team of experts at Demo Consult will be able to pick these questions, and before we conclude, we shall be able to answer all of these questions to your satisfaction. Now, let's move on CPS here. Now, we have also seen the government has struggled with rental tax for years. And now in these recent amendments, 26, 27, we have seen a new law that has come that now people who are earning from rental income, they are now required to file monthly provisional returns. Now, some people are wondering, will we manage filing every other month a return? Isn't it becoming cost now on the side of the business owner? So, as a practitioner, but someone who has advised many businesses, is this a welcome? What do you think? What should now our people in property business, especially those who are earning rental income, how should they prepare? How should they see this? Over to you, CTS, CPS, Lydia.
Okay, so thank you, Sweetie, and this amendment, I don't even know where it came from. It came as a shock to all of us. What we were fighting for and what went to the Ministry of Finance and Parliament to present is for them to consider removing the 50% capping on expenses done by companies because that was really punitive. However, this we did see coming. The fact that government wants individuals that have challenges filing personal returns to file monthly provisional returns is just encouraging tax evasion. So our proposition year in, year out is that when we are approaching taxation of individuals, we must make sure whatever tax we impose on everybody earned by an individual should be a final tax. For instance, taxes on dividends, when it comes to an individual, it's a final tax. Paying, unless an individual has other incomes that is directly more like a final tax and no return is required. So we know that individuals really are not, they do not file returns. This is something we all know as tax practices, practitioners, that individuals struggle with filing returns. Now, if you're introducing a requirement for individuals provision, their rental income, this is just complicating this is complicating collection from individuals. What I would encourage, what I would propose, and I think this will be our proposal next year, next budget cycle, is that we increase the rates, or this agreement remains static at 12%, but it must be a final tax. For individuals filing returns is a no zone. That is if this is really the worst introduction in our tax law, then we hope it is removed in the next budget cycle.
Okay.
It's one of the amendments that we feel we are going to fight back on.
Thank you. Thank you very much. I like it when you bring it out that for individuals, we should have a mechanism that once they are paying, they pay a final tax. And I have seen, I think the ministry and URA, they have appreciated this. Some time back, I was invited by insurance brokers, and one of the questions they had was about filing returns. And I think through their association, they pushed and they were heard. Now, in these amendments that we are talking about today, if you are an insurance broker, just know that the incomes you earn, you will be in net terms, that by the time you receive the money, a commission, or I mean, a tax of 10% has already been deducted off your commission, and you will not need to file any tax returns. So let me hope now that question has been answered. And I think that way, it makes tax administration less costly, because once these taxes are being collected at source, it even becomes easier for the taxman or for URA to actually run through this without running after people, without incurring every now and then. So thank you very much, Zoya, for that. Now, as the government tries to expand the tax base. You know, we have struggled as an economy, as Uganda. Our tax base is really narrow, and over time, even when URA has tried to push the tax to GDP ratio, it has stagnated between 13 and 14 CPS area. Now, we have seen in these amendments that we are discussing that public entertainers this time around are being brought into the tax bracket. Over time, we have seen when international musicians and other entertainers come to Uganda, they are always taxed before they actually pay. But our nationals, our Ugandan entertainers, have always walked away with their money free from the tax. Now, it has come, seems a new day has come, as they always say, that this time around, they have also been catered for in as far as our taxation is concerned. Now, as a practitioner, an advisor, what do you have to say on this amendment, and how will this impact our entertainers, but also importantly, how should they plan their affairs? Over to you, City.
Yes, we met with some of the entertainers, the leaders of Swans Avenue, and their response was that it's really difficult to tax the night economy. The entertainers work at night, and as we are resting, but then they are making money. And I don't want to sound controversial, but I feel like that is a tax base that government needed to tap into. We are seeing so many entertainers with well, and we are asking ourselves that money tax. I think it's only fair that we tap into that space, and I think 60% is fair as well. I think what needs now to be done is the 6% should be final tax. Otherwise, what we're now going to be expecting for entertainers to file returns and pay the 24%, which is going to be resisted, and we are going to encourage that situation. So we might think about increasing this 10% and making sure that it's a final tax. But given this is a welcome addition, and we are happy that government is stepping into that. And public apology to the entertainers, but we need to tap into that growth.
Okay.
And increase our prospects.
Okay. Thank you. Thank you very much. And to our entertainment family out there, if you are an MC, if you are an event organizer, if you are this the singers and all of that, just know that time has come for you to also contribute a fair share to this nation building. It is not just an issue of those who are employed because they are under the pay-as-you-earn system. We have reached at a time where every other person must make a fair share in as far as tax revenue contribution is concerned. So thank you so much, Zuriat. Where we are heading, what I can say is that whether you are an entertainer, just know that your entertainment, your talent is now your business. That is very, very important for everyone who is out there. If you are in the music industry and all these other creators, including influencers, by the way, what I'm saying is that your talent is now your business. That is very key. So if your talent is your business, when we are advising business people to keep records, we are also saying that as an entertainer, as any person in the entertainment world, you are also required to keep records. Short of that, URA will come your way asking some questions which will always be hard to actually defend. And remember, when we are talking about records are not necessarily meant to help you on compliance, but records protect your cash flows and CPS. That is very, very important as we advise people. We need to ensure that records are being maintained properly. Now, another interesting amendment that I wanted as CPS, if you remember the case mountain operators was at Europe again. We have seen that now for people who are on items, merchandise, common, for example, in the supermarket, and the tax stamps have not been affixed, we are saying that this at least has been revised. If you remember, a few years ago, before that case of Mountain Beverages, we saw that URI finding any item, any merchandise of a certain entity in a supermarket without a stamp, a fine would be 50 million. And this now has been revised, which I think is a good thing. And now they are saying, can we bring it down to around 2 million instead of 50 million? And Zuriat, I don't know what you have to say on amendments like this, because when IFRIS was coming, again, the penalty on non-use of IFRIS was 6 million, and the way URI implemented it at the start was 6 million per invoice that was not fiscalized, until we saw Embassy Supermarket again going to court against URI, and Embassy Supermarket won the case. And now we saw the court coming in to say, no, instead of penalizing someone 6 million per invoice not fiscalized, you would rather look at the tax period, and for VAT, the tax period is a month, and that's how we overcame that punitive measure. And now this has also crossed to digital tax stamps. CTA Zuriat, what do you have to say on this amendment?
Yes. Of course, penal taxes are meant to be punitive, but the level of punity differs. If the motive of the government is to encourage businesses in Uganda, then we cannot penalize a business 50 million. That is just closing it down. However, if you take it so low as to 2 million, then again, we shall find taxpayers not taking the law seriously. Yeah, but it's a balance. It's a balance that we think there's more research required here. And this, for me, I feel like we just it might bring up we shall see a situation of compliances from taxpayers because the 50 million was really a scare, and taxpayers were really abiding by it. But now if you reduce it to 2 million, so let us see what it does. Is compliance. My opinion on tax stamps is that maybe what taxpayers don't know is that when you pay for tax stamps, you pay VAT of 18%. So what we had submitted in Parliament some time back is that a tax stamp should not be vertical. So if there is any change that we need in that space, is making tax stamps exempt from tax out of scope. Because a tax stamp is tax. Tax itself. So why are you charging VAT? And the players in the market, they've dominated the market. It's really a tedious process of getting tax stamps. I know, and I've experienced this when I was working with my former employer, who are really struggling with stamps, getting tax stamps. It's a tedious process. So I think those are the changes that we really need. Yes, 50, just to go back to this, 50 million was too high, 2 million is too low. So it's a balance that we need to check. There's need for more research and what really means amendment. Can we ease efficiency of obtaining stamps and affixing stamps? Okay? Because that is where tax evasion is. Because the process of obtaining these stamps alone is really tedious and terrible. And then you must also, it's not just about buying stamps. You must reconcile, keep proper books of records. So we request that this space is reviewed generally for efficiency, make it very easy for taxpayers to access stamps, and that alone will reduce tax evasion. The issue of penal tax, reducing it to 2 million might not help really. That might not help, but
Thank you. Thank you very much. For those who have just joined us, if you are on LinkedIn, just type hash know your tax position. That's our hashtag this evening. For those of you who are tuning in from Zoom, yes, I can see your questions are coming through. We shall endeavor to attend to them before the end of the session. And we thank you for keeping tuned in as we share these insights from the amendments of the law in as far as taxation in Uganda is concerned. Now, for people who are on call, before the end of last year, many people were rushing to actually clear their liabilities because there was a waiver of interest and penalties that were on the ledger by June 2024. That was a good one. Many people did it and actually paid and benefited from the waiver. Now, the government through Parliament and Ministry of Finance saw it fit and actually extended this waiver. This is, I think, good news to people out there that if you had interest and penalties that had accumulated up to June of 2025, you have 12 good months from now. The deadline will be 30th June 2027 to have cleared only your principal tax for you to benefit from the waiver. Hope that one is clear. So what people were fighting for to hit the deadline by June 30th, 2026 has been extended for another 12 months. So if you are planning, that should be part of your planning so that you benefit from this waiver and save some money for your business. Relatedly, for everyone who had, for any business or a taxpayer who had um, liabilities up to 30th June of 2016, these were unconditionally waived. What am I saying? That for any entity that had any liability up to 30th June 2016, that is no more. Even when the ledgers haven't possibly been cleared, it is just a matter of reconciliation, but the government has already taken a position on that, and right now those liabilities are meant to be off your ledger. Now, CPS Juliet, we have again seen issues around IFRIS use and the penalties related to non-compliance of IFRIS. I had already mentioned the 6 million that was being put on people who were not using IFRIS. That in a way stopped. I remember last year there was another kind of amendment, and now there is this one that has just come. And the law is being amended to say that if you are not using IFRIS as guided by the law, then you'll be penalized either when you double the tax that is on that transaction and 200,000, whichever is higher. That's the direction the taxman is taking. And we have also seen where the government had put that whoever buys things of 5 million should actually have an incentive of 5% to say thank you for always asking for your IFRIS. Now, this, I don't know exactly what happened. It seems it didn't work as expected. Now they have lowered the 5 million that if you are Ugandan or if you are in Uganda and you are buying items, merchandise worth 2 million in a month, as long as you are asking for IFRIS every other time that you buy, then you will qualify for a 5% incentive that the government will reward you. So looking at the two amendments, CBA Zuriat, what do you have to say? And as taxpayers out there, how do we need to utilize, how do we need to handle these amendments? What's the impact? Over to you.
Thank you, CPA Eden. To respond first to the waiver, we pushed for this extension. I remember when we met the CGT and we were the waiver that ended the 30th June of 2020 really did this waiver. And if you look at the lectures that GRA has for taxpayers, there is still the mess is still there. So what I'm trying to say is let us extend the for 1 year. Up to 2 years. So that was and the president is this extension. Hopefully by 20th June, we shall all be content in the just finances of knowledge and be able to move forward. We are also very happy that we have passed the law to write off all independent tax and interest out of budget to 2016. However, we are not content with the 2016. It was updated and locked up to 2021. Considered, not considered. So we are submitted a proposal should extend up to 2021. So we are hoping that Parliament would visit us in the next budget cycle and write off independent tax and interest also to the taxpayer. We have a state. Even the law says that taxpayer can only keep on records as one month as the fact of it's not 2016. 2016 is too low. It's too low. So I don't think about any part of the data. Serious given by taxpayers, and we are therefore asking the government to direct cost. That's an interest up to 2021. Now, responding to the issue of interest, I want to encourage taxpayers that this is and one more taxpayers. And let us feel racist. It will help. This result has to be contributing and also I want us to collect that in the submissions we are making. So what we are saying again is that and when you have a child and you meet a child, you also give a space. So they are trying all ways to and I don't think that's taken advantage of the different I don't know if your house it as well it's called the benefited from the so I think that's where I'm scared of that. That is very clear that when you see it should be an instant cashback, not going into cheap what you like taxpayer. Because the reason is that it is your collected history invoice and you have submitted your head, they're giving you a cashback. And to be a cashback, why am I now looking into my other taxpayers? So that is what is there in taxpayers and the streets, even the children is working, taxpayers. How much are not trusting the streets? I don't think that we have utilized the federal tax for I think it's fair. I think we should analyze this area of this. The same time, the use of this. Should be a cashback. And taxpayers should be submitted review before they get their refund.
Thank you. Thank you very much. I hear the good ideas coming up. You know, we have had, when you meet the minister, when you meet the commissioner, we normally meet these leaders as members of Uganda Tax Agents Association. So that's how we happen to lobby for some of these amendments. And when we lobby with other people like ICP also lobbying and these are being passed, yes, we feel we are making a contribution to this country. So thank you so much, CPA Zuriat and the team that we work together for always pushing for some of these issues. Now, I want to first say something when it comes to this IFRIS. Importantly, around November last year, a notice was issued by the taxman URA, adding other 12 sectors of the economy onto IFRIS. This never considered whether one is on VAT or not. I still get calls where people are confused how they will actually be on IFRIS when they are actually not on VAT. Now, I want to put this clear, that as long as you are gazetted to use IFRIS, it doesn't matter whether you are on VAT register, whether you qualify to be on VAT or not. What is important is that you have been gazetted, and our law, our tax law, allows the Commissioner General to actually gazette. So when the Commissioner wakes up and says the entire economy on IFRIS, we should be ready actually to all enroll and use IFRIS. But the other important issue to say is that as long as you are not on VAT, for you, you are only issuing what we call an e-receipt. An e-receipt does not carry a tax implication. It does not have the 18% of VAT, whereas an e-invoice carries a tax implication, and for that matter, the 18%. That clarification is key. Importantly, in these amendments that we are looking at, it has also been appreciated that as long as we are on IFRIS, then possibly in one way or the other, you need to benefit. So government, URA, Minister of Finance, they saw it fit. And now they have said, as long as you are using IFRIS and you are on VAT, the VAT withholding that people have been deducting off your 18% should actually not apply. Isn't that, I think, a welcome thing? So they are encouraging us to actually use IFRIS so that you receive your entire 18, because I've seen some of our clients actually struggle to account. Someone deducts this aside all the 6% of the 18, but someone does not actually remit it to the taxman. When you are filing your returns, you find you are struggling. Do I pay? Do I not pay? So having said that, Juliet, I know this is one of the issues, again, we have been fighting with withholding tax on VAT. What do you have to say, and the people out there, are they jubilating? Are they, because some other people have argued that 6% actually helps them to reduce the burden of paying, that already they will pay the difference between the 18 and what they have received, the 12%. Over to you.
So thank you so much, Jidan. We have already volunteered to help government collect income tax, which is very much unfair to also expect us to collect VAT at source. So I think for me, the whole withholding of VAT should be repealed. What we're seeing here is that only those who are these agents, that's for clients, but taxpayers shouldn't be burdened with collecting VAT on behalf of governments. And besides, VAT is not like income tax. Income tax is a direct tax imposed on income. So the withholding tax, the advance tax, is okay because that is government revenue. VAT is a tax on the final consumer. So if you are told on a business, the business is not a final consumer, you're taking money that is not yours. And you need to wait for the business to submit their kind of return and do what it wants to do. So the whole idea of VAT reform is absurd, and the people are government has seen this. We submitted a proposal. We submitted this proposal, and we're very happy that step by step we are now seeing we've been able to remove the second section of taxpayers from the withholding exemption of VAT. And probably would be repealed from our tax system, and that's what it's saying. Yeah.
Thank you very much. And we are trying to move a bit faster. Time is not on our side. Now, the other interesting part, I've seen something coming up for people who are investing in hotels and tourism facilities, and specifically those who are able to invest at least 10 million for foreigners and also 5 million for Ugandans. And what is the government saying? The government is saying that as long as you incur VAT while establishing a hotel or a tourism facility, you should be able to claim a credit as long as you are within 2 years from when you incur this VAT before the operation or before the opening of this establishment. We have already seen governments trying to encourage investments in hotels. I know, for example, hotels that are country, they are treated differently compared to hotels that are in towns. Now, I see this coming purposely for people who are investing in tourism. What do you have to say? And if you were one of those people who are in tourism, would it be a welcome? Over to you.
Thank you, Sebastian. And yes, if I was as a and to invest in the tourism sector, to appreciate a good tax law encouraging a particular sector, Uganda aims and needs to tap into the tourism industry. And one of the ways of doing that is to extend more incentives to that sector as they are extending to the agricultural sector. So I think this is very good that it's being introduced to that sector. And we need to tap into that sector. There's a lot of untapped revenue. So we need to make sure that our hotels are not so expensive for our tourists. And one of the ways of doing that is by introducing such amendments. So from where I sit, this is a welcome addition in our domestic tax laws.
Thank you very much. Yes, it is a good one. But of course, I'm wondering if you look at 5 million US dollars, how many of us in Uganda are able to raise that amount? Yes, whereas it is a welcome, possibly we are saying that the government is looking at only big boys in the market. So if you are a small boy, possibly this incentive does not benefit you. But for the big boys, I'm sure where they are, they are actually jubilating. So
when we were here last time, we were mentioning about the proposals of the strategic sectors and the exemptions being extended to the strategic sectors. And my submission was that the current tax holiday of 10 years and how it is computed, it is actually not helping our sector. So what we had submitted to Parliament or Ministry of Finance this year is that we bring back initial allowance. So what we are trying to submit this year again, that the section 21 is not working for the strategic sectors like tourism, capping, extending such benefits and then to particular, and then setting a threshold of the investment amount. The entire exemption or tax holiday or incentive is not working. And I can tell you that as someone who is supporting a strategic investor, that you reach a time and you're filing the return and you're trying to compute the exemption, and all the taxpayer is getting is just 100 million. Someone who invested 50 billion, you're only giving that person back 100 million, they will not be able to feel the impact. So we need to bring back initial allowance, which was really clear. The strategic investor would feel the exemption and the incentive there also. Even it's really confusing to conclude. And at some point we had to go through our head, we had to set the business policy, we had to walk through step by step of the computation and the equation they put in section 21 of how to arrive the tax holiday that they are extending to the strategic investors. So we're going to push back on this, and our voice is that we need our strategic investors to feel the tax holiday that we're trying to extend to them.
Thank you very much. We have a few minutes before we open for people to ask, but also to attend questions that people have shared. We see quite a number coming through Zoom. We see quite a number being collected by our team from WhatsApp. We see also quite a number from the Google form, and we shall try to answer these questions appropriately. Those that we shall not be able to answer, possibly we shall agree how to attend to them. But before we get there, again, I see that now for microfinance institutions that fall under Tier 4, Tier 4, that's where we have the money lenders and other microfinance deposit taking institutions. It seems now the government has thought about them, and now they are saying that also once you have bad debts in your business, can you also be allowed to claim these as expenses? Over time, over the years, banks have always been allowed this expense called bad debts, but for the Tier 4 institutions, they have always not been considered. So that means that you would make losses in bad debts, but you would suffer in your own movie, you would not claim anything. So again, CPA Zuriat, this is one of the things that has been on, the discussions have been there, but seems now Minister of Finance has had the price of the many, and this has finally taken effect, effective 1st July 2026. As a practitioner and advisor, if you are to advise those people in Tier 4, where we basically have money lenders and other microfinance deposit taking institutions that fall in that category, what would you advise them in as far as this amendment is concerned?
Thank you so much, President. And I think, and I'm asking myself, what have we been thinking all this time? We think that Ugandans pay back loans. So when we see the comments from the Commissioner General saying that only bad debts that are genuine, and we just want to tell them that just feel that bad debts are genuine. And it is the small money lenders and the small Tier 4 really need this deduction because they are dealing with taxpayers who have the ability to not pay back. Okay, they are dealing with troublesome money lenders. I mean, troublesome clients. Taxpayers. I mean, taxpayers from Uganda as well. And who take loans and don't have the ability to pay back. If anything, this should have been an addition in our tax laws to pay back. And it should go, and this deduction should be even allowed the Tier 1, even other money lenders. Because don't pay back loans. The big portion. And remember, these ones are dealing with Ugandans that comes that live below the poverty line. So what are the chances of paying back? So these are genuine loans. So when the city says the budgets that are genuine, then how are we going to confirm the genuinity of those budgets? I am not saying that indicating there. So that is now going to be left to the discretion of the tax officer to decide whether this loan is bad or good. So this law is going to be it's going to be misused by both the tax collectors and then by even the taxpayers themselves. Because now, if you don't make it very clear of what a genuine bad debt is, if you don't define a bad debt, then that is a problem. So a bad debt, maybe we are going to adopt the definition under section 24, is that you should show that you have taken all necessary steps to recover if you have failed, and necessary steps should include legal means. So maybe that would then, if we adopt the definition of section 24, then maybe for some reason might work. But it's a welcome addition and it should extend to the lower money lenders. Because Ugandans living below the poverty line are the ones that are taking loans out of the Tier 4s and Tier 1s and other money lenders. And the exact Ugandans that are unable to pay back these loans. And we are aware of that. Ugandans refinancing, they take a loan, they take another loan to pay a loan. That's the way of life for Ugandans living with. So we need it. We need the law. scale down, to go down to the lower, the lower levels.
Thank you very much. Thank you.
Yeah.
Yes, yes. You're right.
Point us to get down to the lower,
Mm.
the lower levels, and that is where that's where impact is.
Thank you very much. And the good news that we have when we are looking at these amendments, I know last time when we came here discussing proposals, there was fear that yes, ministry was looking at introducing what we call alternative minimum tax, that once your business has not made profits up to 7 years, that beyond 7 years, then a 0.5% of your turnover would be taxed. But the good news is that this was actually rejected. It was not passed, so that fear should be out. And the other one, where again we had fear as taxpayers, is that again they were trying to introduce withholding tax of 6% on whatever you have sold, whether it is a business asset or not. They were proposing 6%, but also this was rejected. And I think that is also good news. As we continue, as we have a few minutes to close this session and we get into questions and answers, one of the other interesting amendments that now the part of the law that we have is that for people who are into betting, I know especially the youth, betting is a big deal out there. So now they are saying that on what you win as someone who involves in this, then a withholding tax, a tax at source of 15% should be applied. Now, I don't know what the youth and other people who participate in the betting will say, but I see the government is becoming very strict because they don't want someone to just win 100 million, run away without paying a tax. So I think this is a good move in my opinion, but I would like to hear from an expert, my colleague CTA Zuriat, as someone who interacts with the youth. Some of them you teach them, some of them you meet them out there. Is this a welcome?
Thank you so much, Aidan. I think the change that has just been made is that tax should be imposed on the actual income. So the proponents of this law, this proposal, and I agree with them, was that the tax should be imposed on the actual winning. And actual winning is the difference between what you have won and what you put in as your stake. So I'm happy that the law has clarified on that. I'm not always happy when we aim to tax people's capital. If someone has injected in, because by the time they win, they've lost so much. And not even the losses should be considered. Even those losses should be considered. Like if in a year I've been trying out and it has accumulated 10 million, that should be allowed as a deduction. In form of when we go to the other side of now tax collection, of course for winnings and bettings, the easiest way of collecting these taxes if it is a final tax. If it is tax at source and it is a final tax. Because we have all sorts of young boys and girls participating in winnings, and right now we are seeing it's being done online, so it's easy to be collected. So I hope that in the next cycle that there will still be enforcement, and we appreciate that winnings are being defined now, but then we need to do the law to get this tax to be a final tax. And also that tax liability or expectation of returns should be imposed on taxpayers that are in this sector.
Okay. Okay, so that is a good one. As I need to pick a few of these as we try to wind up. I know for years now, Uganda as a country, the government is promoting buy Uganda, build Uganda as a policy for some time, which is intended to support local sectors, local manufacturing companies. Now, in this move, we are seeing government again increasing the rate, what we call the environmental levy on worn clothes, what we call maybe second-hand clothes. And previously the rate was 30%, 15%, and now this is being revised to 30%. I have seen traders, I've had traders actually talking about this. They are not happy with this. But now, as a practitioner, you have indeed a public duty to advise. If you meet these traders, maybe under Casita, and they are raising their concerns on this policy, buy Uganda, build Uganda, as taxes are being increased every other year, CTA, CPA, Zuriat, what would you tell them? What is the impact both on the trader but also on the policy itself? Buy Uganda, build Uganda. Over to you.
Of course, they say that a tax policy, a tax law is used for so many reasons, and one of them is protect a certain sector of the economy. You know very well that we have manufacturers of profits, we have taxpayers that import new products. So there is a lot of they face a lot of competition from second-hand clothes. Okay, so unfortunately to the traders, I think as Ugandans we don't love taxes. Anytime you increase a tax, we saw that people demonstrating against issues, thinking that that was a tax. So anytime you increase a tax, it becomes a problem. But let's think about other sectors that the second-hand economy is affecting. We need to protect that economy. Buying a new place, consider buying a new place and then people, our taxpayers that are dealing with first class and manufacturing of first class clothes are really struggling. They have to sell their clothes highly because of the costs that they incur. Yet, yet we are saying that most taxpayers are dealing with clothes. There's a lot of something. They sell these clothes cheaply, so we must protect the other economy. So by imposing a higher tax rate, it will balance or even out the playing field for both the sellers of old clothes, second-hand clothes, and first-hand clothes. And I'm very much aware someone will come out and say, taxpayers or Ugandans that buy second-hand clothes are those that are underprivileged. I'm aware of that. But it is not really so true that it's only the underprivileged. But majority, of course, are the underprivileged. But we need to even out the playing field. However, my closing remark on this is that this is not the right time to introduce or increase any taxes on the Ugandan market that is still struggling. So we need to find a way of creating the balance in the market, not by increasing taxes.
Okay. Thank you very much. And time is not on our side. As we try to wind up and transit into the other session of questions, I see there is someone whose hand is up. Just give us a few minutes. We shall allow you talk to us. But just to say that now, if you are one of those people who drive and your car is using petrol or your car is using diesel, bad news for you. That starting from 1st July, the fuel, an increment of 200 shillings per liter was put by your government. Yes, just know about it that as you plan for your life, every liter that you consume, actually an increment of 200 shillings was added. Some people are made to think that this will only impact on those who have cars, but as someone who went through an economics class, let me say that as long as fuel prices are going up, then every other person in the economy must feel the impact, because you move from one point to another, or you buy soap, you buy sugar, you buy food, and all of these things are being transported using fuel. So I think that is bad news for all of us, and we need to prepare how to handle that. There has been also increase when you look at sugar. I think 200 has been added. When you look at cement, those who are in construction, the taxes have also increased, and many others. When you look at cooking oil, the taxes have also increased, and many others. Unfortunately, time is not on our side. We cannot possibly go through each and every amendment. But first of all, allow me to say thank you once again for people who are on call, those who are on Zoom, those who are on LinkedIn. We value your time. We feel by the time we conclude this session, you will have picked one or two, because as professionals, as people in practice, it is our role to ensure that we create awareness when some of these things are happening in our economy. It is also part of the contribution that we make when it comes to nation building. Now, important to notice that as we discuss these amendments, the tax arena, the tax environment has changed over the years. When you look at the way URA has progressed, every other thing has changed, especially when it comes to use of technology, when it comes to data mining, when it comes to data processing, when it comes to systems integration, but also data matching. But as the authority is progressing and doing all of these other things, you and me who are in business, how are we managing our side? Are we also advancing? Or for us, we are waiting. When they come knocking, that's when we shall actually remember to prepare. Now, let me first put a comment on that, and we head into the other session where we shall allow people, those who are on call. Because you are on call, we give you a chance to talk to us before we get into the question that we have already recorded down. And there is someone whose hand has been up. His name starts with BAHUMUG. Please unmute and talk to us. Can you hear a bit louder?
Yes. Can you hear me?
Yes, George, the matters. Yes, George. Sorry, I did. But my concern about property tax, I don't know the about property tax. Let's say, for example, if someone was not selling, but immediately said that that's good. You are able to pick that for property tax. Property tax, or there is an increases, for instance, you are also comes in. So, and this money you have just started collecting, you have to make a single pot down with the money in the. So, in terms of your tax, I think we can talk about that. So, would that be fair to collect property tax from the whose own have just started with money as it not as it property is capital. And then you are a different tax that possible. I don't know what the tax can Thank you. Thank you very much. We shall allow 5 people first, and this is number 1. We shall get back to you, Mr. George. We thank you for your question. We have someone called Warren Nue, and you can talk to us.
All right. Thanks, my brother Gideon. Thanks, CPS Juliet. Pleasure to be here and I appreciate you. So straight to the question, I have two questions. One, uh, you talked about the benefits of using e-phrase. I think I have a client who almost bills over $1 billion on a monthly basis. So I would need clarity on the advantage of using e-phrase if I would be able to benefit too. This is something that I've been thinking about. Like we have a prospective client who's going to be buying digital services, and this is particularly in Meta and then those online services like YouTube and the rest. So the payments will be made Nairobi. Nairobi is going to make the payments because I think it's advantageous, right? As in life sums. So the payments will be made through Kenya, then so the Uganda entity will be paid. Then Kenya pays the Meta. So my ask here is why charge withholding as a digital tax? Sorry, I know we are discussing the amendments, but it is something that I need to advise my client as well. Thank you so much.
Thank you very much. That's a good one. We have taken note of that. We still have other three before we come into this. I don't see those whose hands are up. In a scenario that we don't have people with hands up, we shall try to look at this. And CTS Juliet, I hope you have been noting down. There is the first question from George and the second one. Feel free to give your mind. I also come in and give mine.
Yes, thank you so much, George Bakumuza, for the question. Why impose property tax on a fresh building that has not even started generating income? And I think if you saw the article that I wrote sometime back in Daily Monitor, I was calling the government out. There's so many taxes being imposed to this real estate sector. For property tax collected by KCCA, we are seeing income rental tax and all that. And so what we are seeing, if this continues, if this trend continues, then taxpayers, remember taxpayers in the real estate sector need a lot of they get loans to finance that sector. It's really capital intensive. And remember even the interest on the loans is as it is right now, it's not allowed as a deduction. So the sector is not well taxed. The taxes collected from that sector, the taxes are really so punitive. Now, what I have to say is that, unfortunately, that is my opinion on that. The way it is, property tax is not an income tax. So KCCA collects it for administration. So they don't have to wait for you. They don't wait for you to generate income to collect that property tax on a commercial building that you have constructed, and you're going to collect tax on. But I agree with what George is putting across, that I think if property tax is intended to be collected from a commercial building, then collection should be when the commercial building has started generating income. Okay, so I think the first year of operation should be exempted and taxes should be collected. For instance, second year when the building has already started generating and giving back to the person that has injected in a lot of capital, so has used loans to construct and has not even received any reward from that. So I agree with you, but the law is clear: 6% is collected for administration, but it is not collected on income. That is why it is collected in the initial years of construction, unfortunately. I do not agree with it, so we shall try to see how to fight it back. Thank you for bringing that to our attention. I will still insist that the real estate sector is being penalized punitively, and therefore we need to see how to even that out for taxpayers to invest more, because Uganda is a developing country and infrastructure is one of the determinants of whether a country has developed or not. So if you're imposing so many taxes and taxpayers are running out of construction, then how exactly are you making that developing Uganda or leaving Uganda stagnant? Then for Wale, the question is on whether whether IFRIS is advantageous. So he's not seeing any advantage. So the advantage of IFRIS is in tax compliance. When you're in IFRIS, it eases audits. When your documents are proper, you've issued IFRIS, you've submitted your returns based on IFRIS invoices, you will not have penalties, interest, tedious reviews and audits from URA. Your audits will be seamless. So if you're looking at it from that angle, then IFRIS is an advantage. But if you're looking at it from another angle of administration, you need to pay, you need to issue the invoice, it's tedious, then it has its disadvantages. With the tax burden, the additional administrative burden it's imposing on taxpayers. Adam Smith makes it very clear that tax collection should be efficient and should not add more taxes or costs to the taxpayer. So we know that if this adds an extra burden to the taxpayer, but we also know that if this eases tax collection and administration. So we need to look at it from that side. Then for digital services, if the payment is under the ambit of digital services and 5% is applicable, then that is it. However, if the relationship is between related parties, both of you are related, then 15%. So digital services are already taxed under Section 82. International transactions are already taxed under Section 82 of the income tax, and we impose a tax of 15% of all imported services. However, digital services services provided by non-residents under the definition of digital, and digital services are clearly defined, then there's no relationship between the provider of the digital service and the recipient of the digital service, then a reduced rate, a GST rate of 5% applies. Now, to remind Wale that not only 15% is applicable in imported services, but also 18% with last child of VAT. So I want you to consider 33% in your planning. And the VAT is not claimable.
Thank you very much. And to add something on what you have just said, I remember when I wrote an article in the Daily Monitor, I think 2 weeks ago. Immediately after I had put out that article, I received some calls from people asking me about imported services. And around the same time, that's when the case for Ernst & Young versus URI also came out, and it was talking about imported services. Now, let me use this chance to say this. If you are an IT company, if you are a financial institution, if you are a multinational corporation, if you are an NGO, you are likely to have a risk around imported services. If you are buying softwares from across the border, if you are getting experts across the border, then when you also get into related parties, when what we call shared services, you have a company in Kenya buys services, but also a sister company in Uganda is using the same services. Now, just know that you are carrying a risk, and URI has woken up to this reality, even in the cases that we haven't seen are about to come. So it is something, by the time you plan to go and procure something outside Uganda, in terms of services, plan for two things: withholding tax of 15% on international payments, but also the 18%, what we call a reverse charge, the VAT on imported services, which VAT you can never claim back, can only be part of your cost, but in terms of VAT input, that can never be claimed. So as you plan, I see a number of accountants on call. Just know these things around imported services are becoming more serious. So members, really, we need to wake up this reality and plan accordingly. Allow me also say, there is what we call tax transparency, that today you can never do things and hide them. It is no longer possible. We get challenges when we are advising people who are, especially older people, because they have been in an environment where they would not pay taxes appropriately. But I'm here also to give you bad news that things have changed. Today, URA will have information that possibly you in your business you don't know. And with that, chances of hiding and avoiding and evading taxes are very minimal. Just give it a few years when we are all on IFRS, every other person will pay a tax. So, Baumuza, it is unfortunate, yes, government collects money faster before you even start seeing the profit. And that is why every other person must have basics about tax. Bring your proposals. What do you think? As I had stated, we have an association of tax agents, and one of the things that we do, that we collect views from the public, and we push these views to URA, to Ministry of Finance, to Parliament. So whenever people out there are having what they feel is actually a discomfort in their dealings, in their businesses, push them forward. Like this thing of the real estate sector, the taxes are many. It is still a growing sector, but we feel what you are saying, property tax, rental tax, before you even start actually making the money. So as of now, what I can say is that we may not give you a solution, but it is something that we shall keep pushing. As we said, we have pushed some of this for 3-5 years, and finally we are hard. As we push, we are not only alone. Lawyers are pushing from the other side. Our counterparts in other associations are also pushing, and that is how we can work together to build this Uganda. So, Warren, one of the issues of IFRS that we are talking about, when you look at the thinking behind the rewards, the incentive for use of IFRS, this applies to people who are not VAT registered, especially the individuals who go to the supermarkets to buy. Otherwise, if you are an entity that is already on VAT, that incentive does not apply to you, because for you, you use IFRS to actually claim for what belongs to you. But here we are saying final consumers who go to buy for their own use, they are being given an incentive to actually always ask for IFRS. Otherwise, your client who is spending billions or who is receiving billions is able to use IFRS to claim for what belongs to him. I'm sure he cannot just buy and go without asking for IFRS. But then what about the other people who don't know about IFRS? Government is coming to say, ask for this document, because the moment you have it, then it will actually bring a reward to you. That's what I can say here. I don't know if there is anyone online. If they are not there, I can do that. We can attend to some of these other questions that are in the chat. Let's try to handle them a bit faster. We have a few minutes to wind up. Someone is saying you really want to understand how this new law affects part-time employees who are not on a secondary job earning less than the tax-free threshold. I think this one is talking about the pay as you earn, the 40% that applies to secondary employment. And yes, it has also been a contentious issue. But what we are seeing and what we are advising is that, one, for those who have secondary employment, I think time is now that we open up and declare, avoid having 3 employers and they are all using primary rates, because no matter what happens, as long as they have filed at the end of the year, then the assessment will come your way. So to save yourself from now getting assessments for non-compliance, you would rather say, company A is my primary employer, they apply the normal rates. Then the other companies that qualify to be secondary employers, they can now use the secondary or the flat rates. Now, something that is contentious is when to apply a 30 and a 40. Practically, the 30 applies to those who earn up to 10 million and below. Those who are earning above 10 million, they are the people who qualify for the maximum rate of 40. We have seen in some communication where the communication is trying to confuse people that as long as you are in secondary employment, then 40% should apply. And for us as practitioners, we are saying that interpretation is not right. The law is clear. Even those who will apply it that way, if it means going to court, we shall go to court and we interpret the law in a manner that is fair to all of us. Now, social media influencers are earning as much as 10 million tax-free, especially on Twitter. So those ones have already been catered for. Thank you for bringing that observation. Isaac is saying about secondary employment, if I own two businesses, direct and both, is my income in one of the two considered secondary employment? CPS, that you can handle that. CPS is asking if I'm a director in two companies, am I also looked at as a secondary employee?
Yeah, yes. Thank you so much, CPH. Then the question of taxing directors is still controversial because there are two types of directors, and that is how taxpayers are perceiving them. Number one, the first kind of directors are directors who are also shareholders. So they are shareholders involved in the operations of the business. So ideally, for a shareholder, they're supposed to be paid dividends, and any payment from the company to the shareholder should be subject to classified as a dividend and subject to withholding tax. But what we are seeing in practice, increasingly, URA asking taxpayers to add the directors on the profile and file their returns and add them on the payroll. What is clear under Section 19 is the director that should be added on the payroll is a director that has less than 5% of their shareholding in a business and devotes 90% of their time in the operations of the business. And that is the director that should be paid a salary and should be put on the payroll. Otherwise, it's a director who is not registered with URSP and is not appearing on the registration form. That director is a normal employee. And the normal rights applicant employees apply to that director. So if that person is a director in companies, then only it is illegal for both companies to apply that ban. Only one company should be able to apply, and then the other company should apply the secondary employment rates. So I hope that is very clear, and we can add to that in the courts of law because the law is very clear. A shareholder has dividends, a dividend from the company. So increasingly, URA is really misinterpreting this asking taxpayers to add shareholders with the payrolls, what they're telling taxpayers is that shareholders. So it's a management decision that businesses take that pay taxpayer shareholders salary, but shareholders aren't giving short salary.
Thank you very much. And for the interest of time, I agree with you because we have around 16 minutes to close this session. Shaifa on LinkedIn, she's saying, can I use IFRS as a person, e.g. to sell my services? I'm an accountant with a side hustle. And Sharifa, direct to you, yes, you can use IFRS. You can issue what we call an e-receipt, and you are good to go. But also, Sharifa is asking, can I register now that the VAT threshold isn't applicable? Can someone register now that the VAT threshold isn't applicable to them? Now, what I can say, the law does not work that way. It doesn't mean that because now the threshold has been revised, then everyone who is below 300 will wake up and register. No, that's not how the law works. But progressively, If you are testing for when you are meant to register, the threshold is 300. Those who are already on the register, please comply as the law requires you to comply. So let us not be deceived that we are going to the register because the threshold has been revised. No, that's not how the law works.
To be evident, to add my voice to that, is that deregistration can be voluntary. However, you must have spent on the register 2 years. 2 years, you can apply for deregistration if you've been on the register for 2 years. So that is voluntary deregistration. You're free to deregister if you feel you're no longer fit and proper to be on the register. So you submit your reasons why you want to deregister. Of course, you will be audited, and then the decision will come. So VAT is a marriage, just not coming and out. It means easy because in VAT is very difficult. So you need to set your case as why you want to leave the register. Then the case will be registered. But the 2 years start, you must have been on the register for 2 years.
Thank you very much for that. And Vivian is saying on the issue of tax liabilities where Didan was saying ledgers to be cleared upon reconciliation. Let me repeat this. I said for those who had liabilities up to 30th June 2026, all those liabilities have been waived unconditionally. You don't need to explain much as long as they are liabilities, whether it is a principal tax, interest, penalties, code, name it. All those have been waived off unconditionally. So if you have a client or a taxpayer who has those liabilities, just visit your area reconciliation team, then they will ensure that that part is actually cleared. Hope that one is clear, Vivian. And yes, this is Warren Sands come back on the word for IFRS. I think we have already talked through this. Then Abel says there is a need for greater certainty after bills have been passed by Parliament. Prolonged uncertainty over whether it will receive presidential assent or be returned to Parliament can create challenges. And yes, as practitioners, that is our position, by the way. But of course, there are things we cannot, other than giving opinions, there are things we cannot push for. The president remains the president. He signs assents as and when he deems fit. But well, for the years that we have been in practice, maybe CPS Juliet will talk about this. But for me, now the over 10 years that I've been around tax, I've not seen any proposals that have been passed by Parliament around tax being rejected by the president. I've not seen it. Possibly, because you have a different experience, but for me, as long as I remember, I have not seen some of these being pushed back for consideration. Trying to run through this first. This
Yes,
one.
on that note, saw the president trying to push for taxing tax loss making companies in the previous cycle, budget cycles, and there was a pull and push between Parliament and the president. And actually, I think in 2023, we received, because of that pull and push, the amendments were sent through later in September. I think you must remember that. So I think that's the first time we saw President insisting that Parliament reviews and considers taxing tax loss making companies. And thankfully, we thank the Parliament that they rejected the proposal and is still being rejected today. And I hope we continue to reject taxing tax loss making companies.
Thank you very much. We have 10 minutes to go. Ruth Doreen says, thank you. And how can auditors be helpful in Uganda's tax journey and reforms? That's a very good one. Now, me and you as auditors, we have a role to play in this. One, we are advisors, even when we are not possibly paid, but as long as you get an opportunity, advise people on some of these developments, because many people are having challenges, tax challenges, not because they don't want to pay taxes, but because they lack the knowledge, they lack awareness. And that is why for us at Demo Consult and our partners like CPA Zuriat, we shall always come, explain. Those who want to really appreciate the basics around tax will always have an opportunity. That is something we have agreed to do as giving back to the community. Because yes, whereas URA is trying to do taxpayer education and all of that, but we also appreciate that URA will not reach at each and every one. So you and me as practitioners, auditors, accountants, lawyers, I think we have a duty to also support the government, support URA in educating the masses out there on how to be compliant, on how to manage tax issues. Because the moment the population is tax aware, then most of the issues we see actually we shall not see them. Every person will be willing to pay a fair share of his or her tax. Now, this is, as I said, we are moving a bit faster. This one is also saying again, as internal auditors, how can we impact in regard to tax compliance? First of all, those of you who are around tax, let me also say this. We have an association called the Uganda Tax Agents Association, and we feel once we come together and we become a strong force, then we shall easily influence policy. So if you are out there and you are practicing, let's come together. Then we have these discussions and many others. What happens when the company is not yet at the place of paying a dividend, but pays salary to directors? Section 19 of our Income Tax Act, directorship is a source of employment. So as long as you are a director involved in the day-to-day running of the business, you qualify for a salary and you will be paid a salary like any other staff. Questions of dividends will wait for when a company is making profits. Let me pick a few questions again from the question that we have collected on our WhatsApp forum, and we shall answer like 2, 3 before we wind up. And secondary employment, I think we have talked about this. The registration of VAT, we have talked about this. Liabilities where ledgers are to be cleared, we have talked through this. If risk reward, we have talked through this. How can auditors be helpful in this journey? We have talked through this. With many employees working remotely or from different regional hubs, how should we handle pay as you earn registration and deductions to avoid non-compliance? CPA Zuriat, I want you to attend to this in like a minute as we try to summarize this.
I saw that question, CPA didn't, but I really didn't pick the angle from which it was asked. But if I'm understanding the question properly, how do we register for payee? Our registration is online. You apply, you log into the company portal and apply for payee as a tax band. After that, you download the payee template and make sure all your employees have TIN numbers, because employees, the template now does not accept an employee without a TIN number. The TIN number is verified there and then. So you shouldn't worry about the computation, because the template is designed to auto-compute the taxes applicable. So once you key in the gross salary and other deductions like bonuses, then you'll be good to go. What I would advise is that there are some lump sum payments and other payments where you would need support of an expert, and that is when you reach out to us to support you and compute the correct. So in terms of controls, your pay computation and filing, we would advise that that is done by a third party who is an expert. and in determining what is employment income and what is not, what is the taxable benefit and what is not. So if you're not a tax consultant, that becomes a very difficult thing.
So, CPA Zuriat, I want you to use only 1 minute to give us your closing remarks. Time is really, really rushing so fast. And we thank our people for being patient with us from the startup now.
Apologies. I think CPA didn't. 1 hour is not enough for us to dive into the changes. And I would employ to give us more 3 hours going forward. Still July, still early, we can come back, have the discussions on the areas we have not tapped into. And we want to promise taxpayers that I myself, as Zuriat, I sit on the Tax and Economic Policy panel for ICPAU, and I've been sitting on the panel for the last 5 years, and I'm still sitting on that panel for the next 3 years. That is until for the next 3 years. But so what I pledge is that we shall voice out all your concerns, and we are not seated, we are pushing Parliament, and we're making sure that the changes that come do not affect taxpayers negatively. Thank you for coming through to all this. A tax agent is an added advantage to you. You might not see it now, but later on when you're facing all these unnecessary penalties and assessments, that is when you know that you needed a tax consultant by yourself. So let's consider tax consultancy in our strategic decision making. Yeah. Thank you so much.
Thank you very much, CPA, CTA Zuriat. Now, as we wind up, when you are sick, when you don't feel okay, you run to the doctor to actually do a check so that the doctor knows how you are feeling, and possibly you can get an appropriate diagnosis, but also prescription. Now, as a business person, when you are not sure of what to do, where do you go? Now, the message I'm bringing to you is that as long as you are in business, you need to do constant checks to ensure that your affairs are in order. I had already stated that URI has progressed over time, and now they are using advanced technology to actually understand what we are doing, including AI. But the question is, as business people, are we ready? Are we matching that energy? Or we are waiting for them to come and take the decision the way they want? As I conclude, I appeal to all of you that tax environment has actually changed so much, and life is never like before. So my appeal is that as long as you're a business, as long as you have the capacity, get a tax advisor to walk with you a journey. At Demo Consult, we believe that yes, tax compliance is a journey. It is not a one-day activity. So my appeal is that let us not behave as life was 5-10 years ago, because the taxman is not sleeping. And the taxman is not sleeping. I think it is also incumbent upon us to wake up and actually do the right thing at the right time. Let us improve our record keeping. Let us ensure we do the right time, we pay at the right time. That way, we shall ensure that we avoid disruptions. We ensure we are at peace with the taxman, not looking at URI coming your way and you start running. Thank you so much. Thank you for attending. Thank you, the Demo Consult team. Thank you, HD Media, my producers, for having this session from the start to the end. And over to you all. My number is, I've shared my number. Those who need the recordings, just get in touch with us on WhatsApp, and we shall be able to share you can follow us on LinkedIn, on YouTube, on Facebook, but also on TikTok. Thank you so much. May God bless you. Nice evening.